Good evening to friends from India, and good morning to my friends. Some of them have joined from US, and in case somebody has joined from Australia, New Zealand side, perhaps it's pretty late in the evening. So for everyone, let me explain a little bit the purpose of this webinar. About a week back, I completed 24 years of introduction of theory of constraints to India. Now, today I feel good about it. When TOC in India is not an unknown name. I'm not saying it is very widely known, but it's definitely not totally unknown. I can share my experience. 24 years back, when I started, one of my clients, one of my very first clients, every time I will go to meet him, he would use the word or intonation, TOC. Now, I could not understand his way of expression was something a question mark at the end. TOC. Actually, he was asking me tea or coffee. So that was the situation almost 24 years back. Even the copy of the book, the goal was not easily available. In the initial few years, I had to import quite a few books just to make sure that people who want to know more about TOC, at least they can read a copy of the book, The Goal. Today, we have come a long way. Whatever information I have as of the moment, perhaps India has the maximum of implementation of TOC in the entire world. Now in TOC, many of you may be familiar with the concept called 5 steps, 5 focusing steps. But as I have practiced over the last 24 years, I do find that there is step 0, which somehow we had assumed, oh, it is so well known that we don't have to specify. It's so obvious. What I've learned is not so obvious. So for example, whenever we are talking about implementing TOC in any company, I'm assuming for a company that goal is very clear, is making money. How we measure, we'll talk a little later. Even if somebody has no knowledge of TOC, I'll try to make it that at least they get a gist of it. For example, in any team game, all organizations, they are teams. Now, no matter whatever the goal of the organization, mind you, I'm using the word very carefully, not goals, but goal. Goal of the organization, whatever we choose, it must be the same for all people. Do we all agree on this? For example, cricket is very popular in our country. So if we are playing in the second innings of a T20 or a one-day match, the goal is very clear. Goal is to win the match. For that matter, it's there for all sports. For all teams, the goal is very, very clear. It is to win the match. There can't be a confusion about it. However, the method or the process or the means will vary from time to time. For example, if we are playing cricket in a second innings, the goal is to make at least 1 run more than the opposing team within the stipulated time overs without all the players getting out. It's as simple as that. Now, it could mean making more runs than the opposing team, surely. But making more runs is not the goal. Making more runs is a means to achieve the goal, that is to win. So I have found another reason why I'm talking about today on the right measurement. Long time back, I learned from my mentor, Dr. Goldratt, that measurements drive behavior. And his famous quote was, if you don't measure people correctly, you have no right to expect the right behaviors from them. You want more sales, they will give you more sales. Then don't expect profit has happened or money has been made or not. You wanted sales, you will get sales. You wanted market share, you will get market share. So this triggered my thoughts. So I was started looking at it. Is profit the right measurement at all? And over the years, I have observed that many times companies make profit, but they still go bankrupt. They declare profit. Then how can they go bankrupt? I did not understand to start with. Luckily for me, I was very fortunate that one of my clients, way back in 2001, almost 21 years back, they had contacted me. They were in deep financial trouble. They were about to be closed because they didn't have cash. And from 2001, we started focusing on this, the connection between cash and profit. In the last couple of years, we had a unique situation. One of our clients became debt-free about a year and a half back. But the interesting thing is they had declared a loss in that year. But they had become debt-free in the last 15, 20 years. Perhaps the only time they became debt-free. And subsequent year, they made a lot of profit, but not cash. So one thought which has come to my mind, that just because you're making profit or declaring profit does not automatically mean that you have cash surplus. And another important thing is, no company closes down because it has declared losses. Companies close down when they run out of cash. And on this, I can just share, I don't have the exact data. Amazon started sometime in the mid-90s, and the first 5, 6, or maybe 10 years, it did not declare a profit, but it had enough cash. So long you have cash, you can survive. If you don't have cash, you don't survive. It's as simple as that. Keeping that in mind, I wanted to have a dialogue with the people. Is profit the right measurement, or should we have something else? Because if we don't have the right measurement, we are unlikely to get the right behaviors. So today's presentation dialogue is about what should be the right measurement. And I'm postulating a parameter. It's a slightly different from the typical financial measurements. So we are going to discuss that in the next 60 minutes. Let's see if we can cover how much or we can cover, what is the goal, organizational goal, linkage of making more and more money with customer satisfaction, employees, suppliers, society satisfaction, current financial measurements for making more and more money. What could be the harmful effects? And then I'm proposing something called operational free cash score. Then harmful practices preventing growth of OFCS. And time permitting, I may cover 7. What actions do we need to do to achieve growth of OFCS? And an example of one of my clients where we have been involved for the last 7 years. So goal of the organization, measurement. Now, you can ask in whichever organization you are, if you ask the top 10 people, forget about hundreds of people, what is the goal? Please mind that there are no plural in this goal. What are the chances that you will get identical answer? In my experience, I have never got one. If you can get one, it's excellent. But in case you have not been able to get it, the very first thing what you need to do is agree on the goal of the organization. And of course, it's measurement. And second thing, the goals measurement for the goal must not be fuzzy. It should be crystal clear. There is no confusion. No two people should have different understanding or agreement that what is our goal achievement. For the purpose of today's presentation, I'm talking about goal is making more and more money now as well as in future. In 1 minute, I will also connect it that this goal does not mean we do not care about our customers, suppliers, employees. In fact, it is inbuilt in this. For example, the most fashionable goal is to stay customer delight. That's the stated goal of many organizations. Does not mean that it actually happens. But assuming we state our goal is to make more and more money, so more satisfy our customers more and more. In my mind, it is impossible to satisfy our customers for long if our employees are not happy. You can still satisfy your customers for a short period, even if your employees are unhappy, but not for long. And another thing, we cannot satisfy our employees for long specifically if we don't make more and more money, because employees do need increase in their salaries and we do need our other operating expenses. So it is impossible to satisfy employees and customers if we don't make more and more money. I am assuming that this should be okay with, or almost okay with most of the people. Now I come down to what are the conventional measurements of making more and more money. Typically, I'm sure there'll be a few finance people also in the audience. Typical measurement is profit. There are various variants, but I'm saying all the variants put together, profit is one measurement, but profit alone does not satisfy. So we measure something called return on investment, or more properly put, it's called return on capital employed or return on total capital employed. And the last is free cash flow. The problem lies, most of the people, even at the apex level, at best, they have some idea about the very first parameter, profit, very little or no idea about the remaining. What is our return on capital employed or return on investment? And of course, free cash flow. And sometimes I find even the owners don't have an idea. Sometimes even the financial top people also don't keep a tab of it. And the reason being, nobody demands it from them. And the unfortunate situation in many organizations is that many companies close down because they have not focused on it. My favorite example is from Enron. Just 1 month before, Enron went bankrupt. Its chairman, its CEO, and CFO did not know that within a month, they will run out of cash. And of course, they had to close down. Now, what is the purpose of measurement? Purpose of measurement, any measurement in life, not just in the financials, is to help us take right decisions, corrective actions, so that we are able to increase our goal units. For most people, it is almost next to impossible to understand that when they try to get more sales, buy at a lower price, save cost, increase the utilization of their machines or efficiencies, and so on, what is the final impact on these three parameters? And they do then whatever their local measurements are there. For example, I'll give you an actual case study. 7 years back, almost to the date, I was having an interaction with this owner of a large steel company. So he asked me to explain what is theory of constraints. I started my usual thing that it is system performance is not the sum total of all the parts. It is dependent upon the weakest link of the organization. And in my opinion, behind every physical weakest link or constraint, really, it is the policy of the top management owner as manifested in its measurements. So I was asked to prove it. Why do I say that? Because the owner felt as if he's the constraint and the culprit. First, constraint and culprit, they have nothing more than common than the first word C, nothing more than that. So I asked the owner, what is your problem? Why do you want to explore implementing TOC? He said, I have a problem in meeting my financial obligations. I don't have cash. I said, okay, tell me, how do you measure your performance of the company? He said, I measure every month, every week, every day, how much steel in tons we have made and how much steel in tons we have sold. I said, look, you're talking about tons of production and ton in terms of sales. But your problem is not this. Your problem is cash. Many times you have produced more tons, but you did not had enough cash, and vice versa. He said, yes, that's true. So he asked me, what should I do? I said, stop measuring tons, start measuring cash. It was a little painful, but I must admit to the openness of this person, he changed instantaneously. 7 years down the road, from a default grade, today the organization is one of the best wealth creators in the world in steel industry in a period of just 7 years. And I believe the right measurements played a long role in that. Now I'm going to share some of these simple measurements which can help us make better decisions for our organization. This is the most important slide I would like to share with you. Okay, assuming we all agree our goal is to make more and more money. We are a money-making machinery. Once again, I'm repeating, it's also an index of customer satisfaction, employee satisfaction, and society satisfaction. Today in India, there's a mandate that certain amount of our profits, maybe about 1 or 2%, has to go to corporate social responsibility. But that is possible only if we have made money. If we have not made money, how can we improve the society around us? So let us say in one particular period of time, maybe a month, our sales in a particular month is $100. So $100 you can see coming into the system plus. And now I'm going to share a terminology called PVC. PVC stands for pure variable cost. Now, we have written PVC as 60. Now, what does this mean? PVC here means that out of $100, I had to spend $60 for making this sales pure variable cost. This is not total cost. This is pure variable cost. For example, if we are making a truck, now truck may need about 8,000 to 10,000 different parts. In order to make this one truck, I have to buy 8,000 to 10,000 parts. So all that raw material cost will be here. In addition, I may have to also buy many consumables, many other expenses which are directly related with the production or sales of the truck. Now, manpower cost is definitely not one of them. The interest, the depreciation, etc., is definitely not, because those are going to be there irrespective whether we produce or not. But if we take a 1 week holiday in the company, this pure variable cost will not be incurred because we are not making anything, not selling anything. So I'm assuming this is reasonably clear to most people or approximately clear to most people. Ira, is there any hand by any chance?
No, nothing so far.
Fine. So $100 came in, 60 went out. What is left over is just about $40. But that's not enough. We have some other expenses, what we call operating expenses, which is almost like a fixed nature. For example, all employee salaries, all the interest on the loans we have taken, all the rents we are paying for the offices or the factories, and many similar other expenses. They're all clubbed together and we are calling it as operating expenses. So once again, we got $100. $60 went out in pure variable cost. Leftover is 40. $30 went in operating expenses. So what is left over is $10. Typically, this is called profit. As simple as that. Sales minus all expenses, both pure variable as well as operating expenses together, now we have a $10 profit. Very simple so far. Now there's a fourth element. It's called I. You will see it's written 300. This is that money which belongs to the organization, but not available as free cash. What are these elements? It is all money that belongs to the organization. For example, it would be land. It would also mean not just the land, but also the building, all the plant and machinery, all the inventories, all the customer receivables. So all the money which belongs to us, but not available as free cash to pay to the vendors or to the employees, etc. Now, let me move further. It includes any vendor advance also. It includes any money which the government authorities have kept with them and we have to get a refund from them. Any money which belongs to us, but not available as cash. Is it clear to everyone?
Yes, sir.
Now, let us say in 1 month's period, this 300 became 304. It increased a little bit for whatever reason. Now, how much money will go into the bank? Any answer?
6.
Absolutely. Mr. Surya Rao seems to have responded this. 6 is the cash flow. Now, this is where interesting thing is there. What happens if instead of 300, it became 310? How much money will be deposited in the bank?
0.
So we have made a profit, but cash in the bank is 0. And God forbid, this became 305. Then what happened?
5
We have to
will be in the cash.
We had to withdraw from the money from the bank. So negative cash flow. It can be the other way around also. For example, God forbid, our operating expense in one particular month, instead of 30, it became 50. Now let's see the equation. 100 is the sales, 60 is the pure variable cost. Leftover is 40. Now we have operating expenses is 50 for some specific reason. Now we have made a loss of 10. But if during the same period, 300, we could squeeze it down to 280. Now how much cash will go in the bank?
10.
10. So look at all the possible situations. Profit can be negative, that is loss, but cash can be positive. Profit can be positive, but cash can be negative. Profit can be positive as well as cash can be positive. And of course, profit can be negative and cash can also be negative. So you see there's all sorts of relationship are there. Now the question really is, which one should we focus on? And this is where I'm coming. It is cash. Cash in the bank, I'll detail it more in the subsequent slides. Depending upon how you value your inventories, your profit will go up and down. If there's any finance person, let him come over and tell me whether I'm right or wrong. Just the inventory valuation methodology. Is there any finance person in the presentation today here? Please unmute yourself. Either say yes or no. Either way is fine.
Yes, Rakesh here.
Okay. Thank you, Rakesh ji. So it is possible that that inventory depends upon what valuation you're trying to do it. How are your accounting norms are there. Accordingly, inventory valuation will change over. And because of that, you will see a profit can go up and down. So profit is a little fuzzy stuff. There's another area which I don't want to say that, but many organizations do that. Specifically towards the year end, they book fictitious sales. Material has not gone out, but they have booked the sales just on the last day of the month or a few hours before the deadline of accounting year closing. So what can happen? Profit, it can be manipulated. Let me put it bluntly. But there's one thing which is very difficult to, if not impossible, to manipulate, is cash in the bank. Is this clear to everyone? So my recommendation for cash is that cash is reality. Rest, I heard long time back, rest is an accounting opinion. In fact, the definition of a good accountant is when he's asked, how much is our profit this year? He said, tell me how much you want it to be. So unfortunately, there are anomalies in this, but there's one element. If we focus on that, it's more likely to be correct than wrong. So I'll move on. So the three new operational measurements, many of you may be familiar with this, but nevertheless, even if those who are not, there are only three parameters: throughput, investment, operating expense. Throughput is rate at which organization generates gold units or contribution rupees. Please note, it is not contribution. It is rate of contribution. For example, rate here means connotation of time. How much contribution we are generating over a period of time, that is a month, for example, in our case, 100 minus 60, 40 is our throughput. Is this clear? Pure variable costs are all those costs that we can save if we just decide not to produce or sell one unit of our output. So as the equation says, very simple, net sales over a period of time minus pure variable cost exactly at the same period of time, that is your throughput. Any questions on this aspect of it, please? Throughput.
Is it fair to say that this is equivalent to gross profit margin in standard lingo?
No.
How is it different?
Because many organizations use different terminology for what is gross profit. So that's why I don't want to confuse that. And a request, if before you speak, because I can't see you, all of you, many of you are on what you call video is also not there. If you can just announce your name and then ask a question, most welcome.
Okay, my name is Vasu Modi. The question, a follow-up question to that answer.
Yeah.
So in standard parlance, can it be called sales less direct costs?
No. You see, there's so much of a confusion. There are at least 6 variants of profit, which I can tell you. Forget about costs. So I don't want to confuse. I just making it take a clean slate. Vasu, important thing is there's another parameter called sales minus cost of goods sold.
Correct.
COGS. Now, COGS itself is fraught. It's wrong because it depends upon what is the valuation of inventory you're putting in. That's why I want to have a clean break. from other things. Just a clean break. So there's no confusion.
You see, I understand where you're coming from, but how is it practically doable? One has to understand how one arrives at this number.
Okay. We'll
As a
share
concept,
this.
if I understand what the variable cost is, ultimately I'm not going to sit down on the SAP or whatever and take out those numbers. We'll have to tell the people these are the values to be considered, and accounting standard unfortunately considers inventory valuation. How can we ignore it?
Vasu, whatever you have to prepare for the government, please prepare. I'm not objecting to that. But you don't have to use exactly the same thing for taking decisions in your company. That is one. And second, we have been doing this for the last 24 years. And there are many people sitting here in this, I expect them to be there, where we have been doing it for umpteen number of years, umpteen number. It's not so difficult. Just because today you do not know how it can be done, doesn't mean it's very difficult. That's all I would say.
No, so are you saying that we should connect offline to understand how to arrive at this PVC thing?
We can connect offline also, but I can assure you, maybe little later, let me finish my presentation. Then I will ask some of the people who have been practicing it, if they are here in the meeting today, let them explain to you rather than me.
Sure, that sounds good. Thank you.
Thanks. Thanks for asking this question, Vasu. I appreciate it.
Sir, Shivram here. What about direct labor, which is hired as a temporary basis for a particular production that comes where?
Okay. That is also part of operating expense. Now, you have asked a very relevant question. First of all, when we produce less on a particular day, we had hired casuals, which are paid on a daily basis. First of all, you don't reduce them. However, there are certain elements like overtime. Overtime, what we are paying is directly related to production. But the impact is so small that in trying to be very precise, you may lose time and in the process not take the right action. I'm repeating Ali Goldratt's famous quote, be approximately right than precisely wrong. Number one. Number two, what if we are paying the labor per unit of production or per unit of sales? Yes, then it's a variable cost. For example, in mining industry, many times contractors are used to take out the material from Mother Earth. And they are paid on the basis of how much tonnage of material they have taken out from Mother Earth. Then it's a variable cost. That's why please look at it. What happens if we produce 1 ton less, 1 unit less? What are we going to save? Shiv, is this clear to you?
I use one word called it's operation success, patient died. So.
Thank you. My purpose is we should help people become better in decision making rather than making them accountant. I'm no interest in making anyone an accountant.
Sure. Thanks.
And I can tell you very interestingly, less than 1% of the people will be accountants even in our group here. But we all run our home. None of us are accountants, yet we run reasonably well, isn't it?
Yeah.
So accounting on one side is required for compliance. I have no objection. Please do exactly as per the government laws or regulations are there. But that does not mean we have to use the same parameters for making our decisions on day-to-day basis. That's all.
Thank you.
So now we discuss the second element. What is I? All the money tied up in the organization, all inventory and raw material, WIP, finished goods, consumables, spares, everything. Money blocked in land, building, plant machinery, receivables, advances to suppliers, all the insurance money for which we have claimed and we have yet not got it is also a part of this. All the tendered, we give earnest money to participate in a tender, that's also a part of it. all the money which we don't have in hand. Is this clear? Sometime we are forced to pay more taxes. Yes, I'm using the word very carefully. We are forced to pay more taxes than it is due from us. The extra money what we have paid is also part of this. All money which belongs to me but not available as cash in hand is a part of I. Any questions on this? No question? I'll move on. Then comes the operating expense. Now, it is simple thing. Anything which is not PVC, that is OE. I'll repeat, anything which is not pure variable cost is operating expense. Is this clear to everyone? So T, I, and OE, these are the three parameters. Any question on T, I, and OE? Any question?
This is Sanjeev here. OE
Yes.
is equivalent to fixed expenses, right?
Sanjeev, once again, like what was, I am a little uncomfortable using current terminology because what you include in fixed expenses may be different. Are you clear what is PVC?
Yes.
Anything which is not PVC but an expense, that is OE. Is this
Okay.
clear now?
Yes, clear. Thank you.
My purpose is that we don't want to have too much intellectual debate about it.
Okay.
And I will now give you even more simpler method. In your organization, if you ever find there's too much of a debate, is it PVC or OE? Toss a coin. Toss a coin.
Okay.
The reason is it will not make much of a difference in your decision making. We forget that these measurements should help us take better decisions rather than just being too correct theoretically. Is this clear to everyone? Through Sanjeev, thanks Sanjeev, you have asked a very good question.
Thank you.
Now let's look at the little complicated mathematical equations. So profit is equal to T minus OE. I'm assuming this is clear. If it's not clear, please ask me. I'm holding for a minute. Ira, is there any hand?
There is one question.
Yeah.
Third, PVC, S and OE remain same. I decreased. Does it mean more profit? This is from Surya Rao. Yeah,
Mr.
I did
Surya
not
Rao,
understand. He has said S and OE. Are you referring to sales?
Yes, madam. Sales and operational
Sales,
expense.
PVC and OE remain the same. I has decreased. Does it mean more profit?
No. If PVC and OE remains the same, that means the profit remains the same, but cash will go up because I has come down.
Okay, sir.
Are you clear?
Yes, sir.
See, an important thing is, please, this is the prime objective, that profit is not the right measurement of the performance of the company or measurement for making money. Let me put it that way. Surya Rao ji, is this clear?
Yes, sir. Yes, sir.
This is precisely the reason. Now I'm going to an extreme level. Which organization are you working, Surya Rao?
Sir, I'm from Jindal Power, sir.
Okay, Jindal. I'll buy 1 unit of power from you. Forget about 1 unit of power. I'll buy an obsolete spare part from you. Do you have obsolete spare parts?
Yes, sir.
I'll buy for $1 trillion. $1 trillion. $1 trillion I'm ready to buy. And I want a small credit of 3 months. Would you give me?
Definitely should give, sir.
Now understand the implication. As soon as you sell me a part for $1 trillion, there's an 18% GST you have to pay next month to Government of India. Are you clear? 18% of $1 trillion is $180 billion. No one has, at least in India, $180 billion in cash. You will become bankrupt. Are you clear, Surya Raoji?
Yes, sir.
You would have the highest sales in the world, highest profit in the world, but you will also be bankrupt by next month. I'm deliberately talking of an extreme example to explain profit and cash could be very, very different. It's not hypothetical, I'm talking about it. You have been experiencing this. You don't get your money paid from the state electricity boards, correct?
Correct.
But you don't get paid money from state electricity board, but you have invoiced it, your profit is there. And what happens when you don't pay bank the required installment? You can be taken to NCLT. Are you clear about it?
Yes, sir.
See, this is where I'm talking about some of the parameters, what we focus. You have to report to the government. I'm not objecting. Please do so. Let me take a small detour here. When we study in our school, what is the objective? What is the goal? Goal of any student studying in a school or college?
Passing the exam.
This is precisely the problem. Wrong. Totally, utterly wrong. The goal is to learn. Nothing else. Of course, you need to pass. That is a statutory or expectation from you. Do pass. I'm not objecting. But passing the exam is not the goal. Learning is the goal. Many of us in the past, through rote, ROTE, I'm talking about it. They got good marks, but they didn't learn. Do you think it's of any use? Please guide. So I'm moving further. So if profit is T minus OE, then ROI, very simply, approximately, profit upon investment, all the money what we have put in the system is the return. Is this clear? Now I come down to a little bit more difficult job. FCF. This is in financial terms called free cash flow. P minus delta I. Now what is delta? Delta is a Greek letter. It means incremental increase. Is this clear? Incremental increase over the previous period. Vasu, is this clear to you?
Yes, please.
Okay. So I'm now making the same thing, little derivation down. Profit is T minus OE, equation number 1. FCF will become T minus OE minus delta I. Is this clear? I just replace P by T minus OE. That's all. Now comes a little bit more practical thing. Now, most of the time, month after month, week after week, quarter after quarter, we don't keep on investing in new plant and machinery and buildings. Sometimes we do, but not most of the time. Do you all agree? But inventories change almost on a daily basis. Receivables also change on a daily basis. Payables also change on a daily basis. Is this clear to everyone? Any confusion about the first 3 parameters? Inventories, receivables, and payables. Any confusion anybody has? I've also said it should be also depreciation to be subtracted, because if you keep your plant idle even for 1 month, idle, you still have depreciation accounted for. Is this clear to everyone? So if you had 1 crore worth of investment in your plant and machinery, after 1 month, maybe 0.5%, maybe 1/4%, you'll have to write down the depreciation as per the books. Vasu, is this clear to you?
Yes, please.
Thank you. Now, simple example, you buy a brand new Mercedes car, let's say for $250,000. The moment you take out from the showroom, do you think its value remains the same $250,000 or it changes?
Changes.
It depreciates even though you're not done anything. Same thing on our equipment. Whether you use or you don't use, it will change every single day. It is reducing. And operating expenses, we have already covered these expenses. Any question, anybody? This is the toughest thing which I had to explain today. Iraj, please check if there's any question by anybody.
No, there are a couple of comments, no question.
Okay. Now, I have given a new term, operating free cash score. I'm deliberately changing the name. It's a close cousin of free cash flow. But the moment I use free cash flow or anything connected with that, there is a tendency to fall back on familiar terms which many people use in their organization. And here it is, profit, which is T minus OE, plus depreciation, plus reduction in gross working capital. Now I'm using the word gross working capital, plus reduction in overdue payables. I'll explain each one of them step by step. First, any question on profit? Why I'm adding depreciation? Is this clear to everyone? Yes or no? If it is clear, can somebody speak up? Yes, it's clear.
Yes, it is clear.
Thank you. Another parameter is reduction in gross working capital. Now, why I'm using the gross working capital? There are another parameter called net working capital. What is the difference? Typically, gross working capital is inventories plus receivables plus vendor advances minus vendor payables. Is this clear? Typical. Now, I have seen companies who take pride that we have negative working capital. In the past, I have seen 2 organizations where they had negative working capital, which means the amount of inventories and receivables they had was less than the vendor payables they had. 2 organizations, what I have observed in the past, one is Dabur, India, another is Bajaj Auto. But now, why I don't use this? Because I have found, specifically in case of Dabur India, almost 15-20 years back, their receivables had gone disproportionate to increase in sales. Disproportionate increase in sales. Their inventories had gone disproportionate to increase in production. But what they did, they compensated or more than enough compensated by getting extra credit from the suppliers, or I don't know, by not paying them on time. Is this clear to everyone?
Yes, sir.
So what is the purpose of measurement? Can somebody respond to me? Purpose of measurement.
Make more money, 4M.
No,
Measurement drives behavior.
it's to help people take the right actions. Even if I'm getting a lot of credit from my suppliers, does it mean that I can now allow to let my receivables go out of the range? Should I allow more inventory just because my supplier is giving me a lot of credit?
No.
So that's why I'm focusing on, we need to have those measurements such that our people we don't have to tell them what is the right thing to do. Let the measurements drive their behavior. Have the right measurements, you have a very high chance of getting the right behaviors. Okay. So I'm just detailing this a little bit. Profit is T minus OE. GWC is all accounts receivable plus all inventories plus supplier advance plus all other advances, what you might have paid. Because not everything is to supplier advance. Sometime you also have, you have taken a new electricity connection. You have to pay deposit for that. You are planning to get some new, let me say, lease on mining. You have to pay deposit for that. So that's what all it has been covered. Now comes the OFCS is T minus OE, same as profit, plus depreciation, minus increase in gross working capital. Is this clear? Shivraj, are you clear? I can see you from a distance, hence I am asking you.
Trying to understand it better, sir. Sorry, first time.
Okay. Yes, it will take a little time. Now, there's one more element which I've added is called overdue payables. Overdue payables. Now, I must give credit to one organization which opened my eyes here. And that company name is Jindal Steel and Power. A few years back, Mr. Naveen Jindal, the chairman, we were focusing on cash flow. He asked me, are we measuring our payables and overdue payables? I said, no. He said, we can improve our working capital, net working capital. We can improve our cash flow by not paying vendors on time. Correct? If you don't pay your vendors on time, will the cash in the bank go up or not?
Yes, sir.
Yes, but it's not correct.
But it's not the right thing to do.
Yeah.
I agree with you. So we said, okay, we should add this parameter. If your overdues are going up, we'll subtract. If your overdues are coming down, we'll add, because OFCS is just a parameter. It's just one parameter. We want to increase it. Are you clear about it? So just, I have two more slides, but I will share that later. Right now, I'm just trying to make sure that if there are questions, I can take immediately. Any questions?
Sir, can you please explain again when the GWC become negative?
Yes. See, if you are collecting your money from the your customers in advance, Bajaj Auto does that. When you have to buy a scooter or motorcycle, you have to pay in advance. But it does not pay its vendor on immediately. It gets a credit of 30 days. So it has a credit of 30 days. Assume receivables to be zero. Assume for the time being. And it has an inventory of, let's say, a week. So now what happens? You got it?
Right, sir.
This is one company which I am pleasantly surprised. It keeps its inventory very tightly. It keeps its receivables very, very tight. And I think they pay on time. I don't know, but I think they pay on time. And they get credit from their suppliers of 30 days. So net what happens, as the organization increases its sales, their vendor credit is going up. So the vendor credit is funding a lot of their operations. Are you clear, Surya Rauji?
Yes, sir. Yes, sir. Thank you.
The people who are calculating this throughput, if they can share how they can get the pure variable costs reasonably correct. So I was just looking if there's anyone from Jindal. Anybody from Thomson Press?
Well, I don't work in any of those companies. I actually work for a manufacturing company in Nicaragua. We roll premium cigars. And we are implemented throughput accounting in order to have management decisions. How we calculate the, sorry, the throughput, I think it was the question, right?
Yes.
So we we take the totally variable cost that includes the raw material cost and the packaging material cost. And we also include there the sales commissions that we have for our sales rep. And we also have some minor freight expenses that we include there. So we have built some reports that have all the data there, and we can have the numbers on a daily basis.
Okay, thank you. So Vasu, I don't know whether you have been able to get your required answer. If not, we can connect offline also. I'll share with you. Tell me all your expense heads. I can quickly work out with you that what you should include, what you should not include.
That'll be nice. Thank you.
Sir, I am Viresh Bansal. Can I attempt pure variable cost?
Yes, please go ahead. Viresh Bansal, which organization you are from?
I'm into garmenting industry, next generation clothing. So we make customized orders, made to order business we are into.
Right.
And once we get any orders, we have variable cost, fabric, trims, accessories, packing materials, whatever particular to that particular order.
Yes.
And that goes as a pure variable cost for us. Whereas all other costs, we keep it as OE operations, including electricity, rentals, interest cost, whatever cost is there, both operationally as financially, all other costs, we keep it as OE cost. Am I attempting right?
See, you can look at it that take a typical thing. If this order was not there, what would I save in expenses? That's all. And Vasu, important thing is sometimes there are areas which can be partially variable, partially fixed. We don't too much worry about it because our is not to get a PhD in accounting. Our job is to help people take better decisions fast.
Sure.
For example, in steel industry, it is possible that power is a variable cost. But even within power also, it is quite possible a portion of the power is a fixed cost.
I understand, but that is so insignificant that it's not worth spending
That's
time.
right. You said it pretty accurately. The purpose is we should be able to take a good hang of this thing so that we can take decisions fast. Don't want to waste too much time in calculating whether it's right or wrong.
Got it.
Anyone else has any question?
Excuse me, can I have a question here?
Yeah, go ahead, Kevin.
I would like to go back to the definition of the goal of the organizations. At the beginning, you mentioned that it doesn't look like everyone is clear on the goal of the organization. And we have seen several cases that the CEO is so focused on the sales of the company. Even not, so they have the notions that as long as I have more sales, I save as much cost I can have, then I can have profit. So with the time limited, if we start a conversation with CEO, what kind of questions that we can draw the attention from such top management and then approach them to go to the right area to focus on?
Thank you, Kevin. You asked a very relevant question. However, look, let me give you a quote, what I learned from my son, Nikhil. Almost 15 years back, he said one small thing. It's easier to sell painkillers than vitamins. What happens? If you address some pain of your CEO, he's likely to listen to you. Otherwise, you go, oh, you attended a training program or a webinar, and those people are saying, change this. He's not going to pay any attention to you. Look at the pain point of your CEO. What are the pain points? If he does not have a pain, sorry, I don't have an answer. Even Mr. Jindal Steel and Power, he would not have paid attention to me or my thoughts if he did not have a cash issue. Is this clear to everyone? Look, all of us, we don't want, we go our life, take it easy. We don't do the right things. Why? Because we feel we are good. There's no problem. Why should I do anything extra? I can tell you my own. For the first 40 years of my life, I hardly did any exercise. I was perfect. Why should I do any exercise? Only when we had some issue, then only we start exercising. Oh, I have to take care of this. I have to take care of that. So frankly, Kevin, unless you know the pain of your CEO, he's not going to listen to you. Now I'm making...
Rakesh here, I have a question.
Yes.
Till earlier sessions, you were using free cash score on the overall basis.
Yes.
But now you have changed it to operational free cash flow, free cash score. So what's the intention? Why do we need to do this?
You see what happens, I have to segregate free cash flow, which is an accounting term. In free cash flow, there is, if you have taken loans, that will also come into free cash flow. If you have repaid loans, that will also come in free cash flow. If you are invested, that will also come down from your free cash flow, and so on. Now, I'm not talking about new investment in this. Is this clear?
Got
Jeff, by any chance, you have any question? He's got up very early in the morning. It is still 6:30 or 7:30 at there.
I'm clear. I'm good to go.
Thanks. Okay, I'll cover 2 more slides.
Yeah, so before you go ahead, I'm just sharing. There's one more question on project. One question had come earlier. Now, I'll just read out the question. How can TOC help in project perspective? Because for a couple of years, we only have to spend. We are not earning anything.
Okay. So TOC perspective, who has asked this question?
Irfan Khan.
Irfan, if you can switch on your video, that will be nice. Yes, thank you, Irfan. Which organization you're working for, or your own organization?
Sir, I'm working in a Jindal Panther Cement, which is recently opened by JSPL.
Okay, thank you. You see, for a few years, you are only investing and investing and investing. Correct? Now, remember, for your organization, today this will not be directly applicable, but what it can, and this is important for you. I'm just taking a number. How much investment are you planning to put in this project? Approximately give me a number, that's all.
2,000 crore.
2,000 crores. Excellent. Once 2,000 crore project has been put on, now, after that, what will be approximately sales per month? Approximately.
Approximately sale.
In tons, you can give me, then we will multiply. You can give me in crores, whatever you want.
We will produce, sir, 5 million tons per annum of cement.
So please convert to month. Little over 400,000 tons.
Yes, exactly, sir.
And now convert into per day. Let us say we make it 13,000 tons per day.
Exactly, sir. It is around 13.
Now, everyone can understand. See, this is the first time I'm discussing this. So we have 13,000 tons. Now, in these 13,000 tons, What will be the average selling price per ton? Give me an approximate number at today's prices.
So 5,000 rupees per ton.
13,000 multiplied by 5,000 is how much?
650 million.
Sir, 65 million.
So let's put it 6.5 crores. You put
Yes,
one side, you talk about crores, then please stay on the same line. 6.5 crores.
6.5 crore, yes, sir.
Okay, what will be the pure variable cost in cement approximately? 20, 30, 40, 50, 60, 70, choose a number.
Sir, it comes around 50 to 60%.
I'll take it 50%.
50%, sir.
So 6.5 crore, 50% is throughput. So it is 3.25 crore per day. Am I right?
Yes, it is.
Now, it's important in a project. Every day you delay your project, what is the loss?
3.25 crore.
3.25 crore. Now, what is the time period you have taken to complete this project?
24 months, 2 years.
2 years. Now, if I were you, I will not use the word 2 years. I will definitely not use even 24 months. I will take 730 days. Now, if we can bring it down by 10 days, what will be the benefit?
32.5 crores.
32.5 crore will be the benefit.
Now, if we can bring down by 30 days, how much will be the benefit?
100 crores.
3 times more.
Literally 100 crores, correct?
Yes.
Now what happens while you're executing your project, you'll have to see, many times you go to reduce the cost of input materials, inputs which are going to the project. What you don't realize that what is the loss we have or the gain we can have if we can bring down the project time by one day or 10 days or 100 days. Are you understanding? This 24 months, 2 years or 730 days, it has not come from God. It's not the God's world that it has to take 730 days. Think hard. What do we need to do to bring it down to 18 months, 540 days? Think about it. If we could bring it down by 200 days, assume the saving is 650 crores, correct?
Yes, sir.
Now you can think, okay, if I have to complete in 730 days, my investment is 2,000 crores. But if I have to bring it down by 530 days, within 530 days, I might have to spend 100 or 200 crores more. Should I do it or not?
Should do it.
This is where this financial literacy becomes helpful to you. Are you clear about it?
Yes, sir.
You start generating cash much earlier, even though you have to put a little bit ahead. Are you clear about it?
Yes, sir.
Now, my basic purpose of sharing with you is that, in my opinion, the real constraint in both small and large organization is financial illiteracy. Yes, I'm using the word very carefully. Financial illiteracy, not only at the lower level, but even at the topmost level. All the time we are focusing on reducing cost. In fact, long time back, I'm talking about 45 years back, I used to work in Tata Motors. Suddenly, one fine day, we had this mantra, cost cutting. And you know what joke we used to make? Cost cutting at any cost. Most of you would have experienced it, that for saving a small money, we lost a big deal, isn't it? Have you not seen it? Okay. My purpose of today's presentation was first to share simply, in my opinion, what is the right measurement. Second, imparting financial literacy to any person who has no prior knowledge of accounting. Zero accounting knowledge required. Zero. So, Kevin, some of the things what you experienced, I'm just sharing it. Most time, we have a major problem on free cash score. We are obsession with increasing sales turnover. Obsession. Oh, now we are a $1 billion company. $1 billion cash in the bank? No, not even profit. It is sales. In my opinion, you look at it all around you, how many companies have gone bankrupt, which is $1 billion plus sales? Have you seen any company which is $1 billion plus sales, but has gone bankrupt? Please share. No one?
Enron.
Enron is one. Anybody else?
Lehman Brothers.
Okay. Anybody else?
Even Indian version ILNFS.
You have Jet Airways, Kingfisher, SR Steel. So many. Now, turnover doesn't tell me anything. In fact, somebody has put on my LinkedIn this thing, turnover is vanity, profit is sanity, cash is reality. Okay. Another one is increasing debt for growth, increasing turnover and profits for additional and for taking additional working capital. Now, GE suffered on account of that. They went on acquiring many other companies on the assumption that loans will be continuously available. Who has promised you? First of all, there are two types of loans, long-term loans, which there's a particular tenure you have to return. There's no guarantee that they will roll over. And another is cash credit limit, temporary loan, which is typically given by 1 year for 1 year by the banks. And every year you have to renew it. Most of the time they do, but there's no guarantee. They may not renew. That's why the red is erroneous assumption is that loans will always be available. Who promised you this? Poor financial literacy of the top management. Performance bonuses, key performance indicators, KPIs not aligned with 4M. Recently, in one of the large companies, we have aligned the performance bonus of all the top management people, at least 100 plus people, with this parameter called operational free cash score. Now I will tell two other things which you can use it very regularly. Extreme focus on increasing profits through reduction in both variable and fixed costs. What happens? When I want to buy raw material, I don't need to buy the entire raw material I'm buying today immediately. But if I buy a large quantity, what is the experience? I get some reduction in price. When I reduce my raw material cost, what happens to my pure variable cost? Goes down. When I reduce pure variable cost, what happens to throughput? It goes up. What happens when throughput goes up? Profit goes up. Profit, yes, goes up. But what happens elsewhere? My inventory has gone up. And it's quite possible that in many large organizations and small organizations, I see people buying more than immediate requirement only to increase profits. But in the process, their cash flow is impacted negatively. Exactly the same thing in accounts receivable. A customer says, I'll pay you 2% extra. Give me 1 month's extra credit, which otherwise he was ready to pay regularly. So what happens? We get additional 2% sales price. Now look at what happens. Assume my selling price is 100. My variable cost is 70. I'm just taking a number. So what is my throughput, Shivraj? You are in front of me, hence I'm asking you.
30, sir.
30. Now I have increased my price. I am giving me 1 month credit and it will become 102. Selling price has increased by 2%. So 102, my contribution throughput has gone to 32.
Right.
So my contribution throughput, I think there's a, your daughter wants to participate.
Sorry, sir. Sorry for the disturbance.
So it has gone up. Now what else has happened?
Yes.
First, because you don't have money, you have to borrow this money. Let us say you borrowed money from the additional money from the bank and you're only paying 1% instead of 2%. So your fixed expenses will go up by 1 rupee. So your profit throughput has gone up by 2 rupees. Operating expenses have gone up by 1 rupee. Your net profit has gone up by 1 rupee. Clear? But what else has happened? Your working capital has gone by 102. Because now you're giving a 1 month credit, which you were not giving earlier. Are you clear? So it will take you 102 months to just to recover that thing back. For next 102 months, which is 8.5 years, 8.5 years, your cash flow will be impacted negatively. So this is what I'm trying to put it is because we are not aware, it's the wrong measurement. Profit seems to be the most important parameter. My recommendation is first focus on free cash flow, operating free cash flow, cash score. And then if you can make profit, I have no objection. But by increasing profit, your cash score becomes negative. It's a harakiri. That's all. You're taking a big risk. Now, this is my recommendations. Those who want the presentation, please send us a mail. We'll send you the presentation. Stopping current wrong actions are more important than starting new right actions. If you have observed something, what you're not doing right, please stop doing it. Stop measuring organizational growth in terms of sales volume, sales turnover, profit, market share. These are the 2 wrong things. Let's look at the next one. Start measuring cash in the bank. Less all loans, less all supplier payables. This should improve. And it's not difficult at all. It's the easiest thing. Can you not know how much cash you have in the bank every morning? Vasu, I don't think so. It will be so difficult for you to know how much is the money you owe to the banks or to the lenders and how much you owe to your suppliers. Cash in the bank, less all what you have. You have to pay. See if that figure is becoming, if you're already negative, it should become less negative. If it's positive, it should become more positive. Decide on OFCS as the prime measurement for the organizational goal. Align all KPIs and bonuses of top management with the increase in OFCS. Take debt for survival only. Yes, this to my mind is the key. Don't take debt to increase sales, volume, turnover, or profits. Now, I'm going to take a few minutes to explain. I'm just stopping this thing to explain you what percentage of the companies which take loan, how many of them are successful? How many of them are able to pay back the loans adequately in due course of time? How many? Give me a number.
Only 1-2%.
Okay, let me make a case 50%. That means 50% of the companies who are unable to achieve when they take the loans. Do you agree with this?
Sir, I disagree. 80% of the companies are able to pay off their loans.
Okay, Nehrandu.
70 to 80% of the companies.
Okay, I take your word also. So do you
Otherwise,
agree?
the cases would have been much more distressed.
Okay, I got it. I'm moving fast because I'm short of time now. So 20% of organizations fail. Do you agree?
Okay.
Now I'm going to ask you, you know something called Russian roulette?
No.
So I'll explain you. This is a hypothetical game in which there are 6 bullets. 1 bullet is put in a pistol. 1 bullet out of 6. And you have to put the gun here and fire. What is your chance of getting killed? What is your chance?
1 by 6.
1 by 6, which is 16.67% that you may get killed, but 83.37% is the chance that you will survive. Are you clear, Nehrandu? Unmute yourself now. So how many of us will take such a chance? I'll give you $1 trillion if you survive. Would you take such a bet? You have only 16% chance of getting killed. We don't. Whereas you say it is 80%, Irfan said 1%, I said 50%, but definitely not 100% of the companies survive. Is this clear to everyone? Yet we take loans to go bankrupt. That's what I'm trying to explain to you. Please, you spend your money. Only in a rare case you should take debt. Debt is like steroid. Sometimes to save your life, you may have to take debt. But don't take steroids to build muscles. That's what I was trying to share. This is my personal opinion. I leave it to you to what extent you agree or you don't agree. I would share whatever I had to share. So I'm just sharing one small thing. Expand business using your own cash only. Stop measuring organizational performance monthly or quarterly. Start measuring and taking action for increasing OFCS weekly. For most of the organization, we find a week is a good enough parameter to what you call measure it and look at it. Any questions? We still have 2-3 minutes. 7 years back, we were in the default category. Today, we are in high investment, what you call rating. Jindal Steel and Power now has been rated once again as one of the biggest wealth creator in the steel industry in the entire world. So that is what I had to share. If you have any questions, feel comfortable. We still have 120 seconds. Harishji, we had asked a question to you. Perhaps you were not there or you could not listen to us. Can you unmute yourself?
Sir, good evening, sir.
A question was asked whether we have any difficulty in calculating pure variable cost week after week. Are we able to do it week after week or not?
Yes, we are doing it. Initially, at the start of the session, this question was asked. We are doing it. No issue at all.
Okay. My point is we are doing week after week for the last 3 years or so, almost 3 years.
Yes.
So initially, anything what we have never done, it looks difficult. But once you know, it's no big deal.
Definitely, sir. Agreed.
Mr. Harish Sani is the CFO of Thomson Press.
A quick question.
Yeah.
In our initial slide, we have shown that I is equal to 300. So some amount of investments will always be there, right? Like
yes.
Inventory
yes.
or
yes.
receivables.
Yes.
So is there any thumb rule depending upon the industry or segment, what it should be?
No. I'm looking, I have a, see, Yash, which organization you are calling from?
So I'm basically working, heading up heavy fabrication industry in Pune.
See, the point is, if I tell you for another company, this is the industry norm, most of the people don't buy that. Sir, their condition is different, our condition is different. We are different. That's the, I heard every time. So I don't want to compare you to anybody else. All I'm saying is, wherever you are, can you improve? That's all.
Yeah.
Whatever best you have done, improve upon that.
Got it.
Thank you. Rajesh.
Thank you very much, sir. Thank you.
Rajesh, you wanted to ask a question? Rajesh Mohan, unmute yourself.
Yeah.
Yeah,
Am I clear? Can I be heard?
Yes.
Yes. Thank
Yes.
you very much for such a clear explanation. And of course, congratulations to the story of Jindal Steel. I have a question on the side, and it's your comments that
Yes.
might be interesting. To look at all these companies today who are valued heavily across the world,
Yes.
who are not generating cash,
Yes.
and there's a sentiment in the market where people are generating, so to say, wealth, where these companies are actually not generating any cash.
Yes.
What do you have to say for them?
Look, it's a bigger fool theory. As simple as that. My friend Captain Gopinath, he put the topi on Vijay Mallya. Sahara Shri put the topi on our friend Naresh Goyal. Fine. You find suckers, go ahead.
Finding the bigger fool.
Finding the bigger fool. Zomato did the same. Go ahead. But be careful. If you are unable to get off in time, you could be in deep difficulty. That's all.
But the question is, like you are saying, and all the 100 people here, they recognize, everybody knows this by now. But still, this cycle is going on. I mean, we are seeing...
Look, let me use the word. There are enough fools in the world. Question is, are you able to make them? Can you take advantage of them? Go ahead. If you have the ability to take advantage, go ahead. If it meets your conscience, go ahead. हिंदी में बोलूंगा, दूसरों को गोली खाते खाते खुद मत खा जाओ वही गोली. That's all.
Right.
It depends. If your goal is to increase the valuation of your company, go ahead. That's why I said I don't look at it. I'm looking what is the goal of the company. Please agree on the day one. That you want to increase the valuation up to a point and then get out before people find it out that it's just a balloon, nothing else.
Shell inside, yeah.
Huh? Okay. That's all. Okay. Thank you very much. Appreciate everyone's on a weekend. Appreciate everyone. Thank you very much.
Thank you, sir.
Thank you, sir. Thank you.
Thank you, sir. Thank you very much.
Thank you, sir.